So the crypto market as of late has been very much dependent on stuff outside of crypto, those macro factors that we talk about a bunch. Fundamentally, most assets in the crypto space have in fact either stayed the same or gotten better. Something like ADA, for example, major advancements have been done on the Cardano blockchain, prepping it for the bull market cycle. So it's better than where it entered 2023, but yet the price is down around the same levels. Okay. That's just kind of where we're at right now. That's what happens during these bear market cycles. But one of the biggest things we've been trying to contend with lately has been inflation. So we got the CPI report back again yesterday, and go figure, we had another hot report. We were higher than expectations. Inflation up 3.7% over the last year. And in fact, this last month, we saw a 0.4% increase overall in terms of inflation. So these are not the things that you want to see. We're not getting much help right now in that regard. So things that were up heavily again, fuel oil was up, energy was up. We saw increases in shelter. I mean, it's hot in a lot of places right now. Okay. So what we're seeing is that spending is still up. Prices are still increasing. Okay. But the great thing that we are starting to see is that the Fed has a less likelihood of actually raising interest rates again. So this is a great sign, right? The Fed is getting close to that point of pivoting. There is a 92.3% chance that they do not raise interest rates at the next FOMC meeting, which is happening at the end of the month. Now, if you remember, they've taken a very data-driven approach, right? They're looking at all these numbers. They're weighing those. Obviously, the jobs report was hot. The CPI report was hot. The PPI report was hot. I think right now it's going to heavily depend on what comes back in terms of the GDP. Now, the GDP, I think, is going to show something very interesting, and that is that spending overall is dropping, okay? So although prices are high, it's because a lot of people have gotten ingrained in these points where they think these things are necessities, okay? Because that's what they've become accustomed to over the last few years. Well, the thing is household spending is dropping, stores are drying up, not physical stores, but stores of capital in people's households is drying up. People are essentially running out of money. Spending is going to drop. We're going to see that impacted as far as GDP goes. And so now the Fed is beginning to realize this. They're slowing down in terms of what they're doing, which means that we're going to hit that pivot sooner than later, right? Now, what does this mean for the markets? Okay. Sorry, that was a lot of complex stuff, guys, but hopefully I tried to make that as easy as possible. What this means for the markets is right now, we're not going to see any major movements, I don't believe, one way or the other. Okay. We're going to stay, I think, pretty flat, maybe a little bit of consolidation to close out the year, maybe bringing in some new lows. Obviously, who really knows here, but everything is going to be kind of boring, which means that this would be the first October historically that we've had that has been red in terms of BTC in 5 years. Okay. So we obviously had a really good September. Going to have a bad October is what it feels like as of right now. Obviously, this can change. We get to the end of the year, we get some shorts liquidated, things can turn around. We could see some climbing. It's definitely possible. Right now, guys, anything is in play, but these are the things that we're contending with. Now, this doesn't mean that we're going to continue to be bad for a very long period of time. I've been very vocal in my thoughts of entering 2024. I think we enter 2024, we see a lot of what happened to begin 2023, right? That explosion to begin the year, happiness everywhere, people talking about the bull market cycle, people talking about the Bitcoin halving. I mean, this time is very swiftly approaching, and the macro factors outside of crypto are going to have less of an impact when you get to that period of time. Okay. It's just how it works, guys. These market cycles, they're very consistent. And maybe the length of time changes. But again, like I said earlier today, the outcome remains the same. We continue to push up. We continue to create new all-time highs. We continue to push adoption. And those times are very swiftly approaching. So I appreciate you guys. I hope you guys enjoyed the video. We will get past these times, guys. We're going to border, I'm guessing we're going to border on the cusp of a recession. I don't know if we fall down into one or not, but that's been the Fed's goal this whole time, to get us to that essentially tipping point so that spending drops, so things start to improve on a macro standpoint. And then that's where everything can really just explode for the next 10 years. So appreciate you guys. Hope you enjoyed it. Show your support below. Let me know your thoughts, and I'll catch you in the next one. Take care.